Have you ever wondered how some investors seem to always be ahead of the curve? Meet Cornelius Vanderbilt, the man who turned $100 into a $100 million empire in the 19th century. Vanderbilt was not just a businessman, he was a visionary who saw potential where others saw none. Did you know that at the height of his career, Vanderbilt controlled 10% of all the wealth in the United States? That's like one person today owning the entire wealth of the top tech giants combined. His innovations in the railroad industry not only made him rich but also changed America forever. In this video, we'll uncover 12 powerful tips inspired by the First Tycoon that show how Vanderbilt's investment and innovation can guide you today. You'll learn about his strategic partnerships, his knack for timing the market, and how he built a legacy that lasted generations. Ready to dive into the world of investment with a fresh perspective? Let's explore how Vanderbilt's genius can help you seize opportunities, manage risks, and transform your financial future. Get ready to think like a tycoon. Chapter 1. The Visionary's Blueprint: Investing like Cornelius Vanderbilt. Cornelius Vanderbilt wasn't just a businessman, he was a visionary. He saw potential where others saw risks. Vanderbilt's foresight was key to his success, especially in the railroad industry. One of his most remarkable traits was his ability to spot opportunities early. For instance, he invested in railroads when they were still in their infancy. This bold move paid off tremendously. Vanderbilt's approach teaches us the value of looking ahead. In today's market, this means identifying emerging industries and technologies. For example, sectors like renewable energy and biotechnology are on the rise. Investors who spot these trends early can reap significant rewards. Statistics show that early investors in renewable energy companies have seen returns exceeding 200% over the past decade. This mirrors Vanderbilt's experience with railroads. His success wasn't just luck, it was a result of careful planning and strategic foresight. Never let the future disturb you. You will meet it, if you have to, with the same weapons of reason which today arm you against the present, said Marcus Aurelius. Vanderbilt lived by this principle, always planning for the future while managing present risks. His blueprint for success was a combination of vision, planning, and boldness. Chapter 2. Risk and Reward: Navigating High-Stakes Ventures. Vanderbilt's career was full of high-stakes ventures. He wasn't afraid to take risks, but they were always calculated. His investment in the New York Central Railroad is a perfect example. It was a massive gamble, but he believed in the potential for growth and profit. Modern investors can learn a lot from this. Taking risks is essential, but they must be informed risks. According to a study by the University of Cambridge, diversified portfolios that include high-risk investments tend to outperform those with only low-risk assets. Vanderbilt's strategy involved thorough research and understanding of the market. He knew the railroads were the future of transportation. Similarly, today's investors should research and understand the industries they invest in. An interesting fact about Vanderbilt is that he once controlled the only rail link between New York and Chicago. This monopoly gave him immense power and profit, demonstrating the rewards of strategic risk-taking. Investors today should look for unique opportunities that offer high rewards. Chapter 3. Monopoly Power: The Art of Dominating Markets. Vanderbilt was a master at creating monopolies. His control over the New York Central Railroad was just one example. By dominating key routes, he eliminated competition and maximized profits. This strategy is still relevant today. In the tech industry, companies like Amazon and Google have achieved similar dominance. They control vast market shares, reducing competition and increasing profitability. According to Statista, Amazon's market share in the U.S. e-commerce market was 47% in 2020. This dominance is reminiscent of Vanderbilt's control over the railroads. Vanderbilt's success teaches us the importance of gaining a competitive edge. This can be achieved through innovation, superior service, or strategic acquisitions. His ability to outmaneuver competitors was key to his monopoly power. A unique quote from the First Tycoon illustrates this: "He who controls the routes controls the profits." Vanderbilt understood this well and built his empire accordingly. Investors can apply this lesson by seeking opportunities to dominate niche markets. Chapter 4. Innovation in Infrastructure: Building the Future. Vanderbilt's investment in infrastructure was groundbreaking. He transformed the railroad industry, making transportation faster and more efficient. His innovations included standardizing track gauges and improving rail safety. These advancements revolutionized the industry and set new standards. Today's investors can learn from Vanderbilt's focus on infrastructure. Investing in innovative infrastructure projects can yield high returns. For instance, smart cities and sustainable construction are growing fields. According to the McKinsey Global Institute, investing in smart city infrastructure could generate $20 trillion in economic benefits by 2026. Vanderbilt's approach was to invest in projects that had long-term potential. He wasn't looking for quick profits, he wanted to build the future. This mindset is crucial for modern investors. Long-term investments in infrastructure can provide stable and substantial returns. A fascinating fact about Vanderbilt is that he once owned more than 10,000 miles of railroads. This extensive network allowed him to control transportation across the country. His investments in infrastructure not only made him wealthy but also transformed America's economy. Investors today should consider the transformative potential of infrastructure projects. Chapter 5. Strategic Alliances, Partnering for Profit. Vanderbilt knew the power of partnerships. He often formed alliances to strengthen his position. One notable partnership was with Jay Gould, a fellow railroad magnate. This alliance helped Vanderbilt expand his influence and control over the industry. Strategic alliances are just as important today. For instance, tech giants like Apple and Microsoft have formed partnerships to enhance their products and services. According to a report by Deloitte, 70% of tech companies consider strategic alliances essential for growth. Vanderbilt's partnerships were based on mutual benefit. He understood that collaboration could lead to greater profits. Modern investors can apply this by seeking out partnerships that offer complementary strengths. A unique fact from The First Tycoon is that Vanderbilt once partnered with his competitors to create a more efficient railroad network. This collaboration reduced costs and improved service for all parties involved. Investors today can learn from this by looking for win-win scenarios in their alliances. Chapter 6. Diversification done right, spreading investment wings. Diversification was another key strategy for Vanderbilt. He didn't put all his eggs in one basket. In addition to railroads, he invested in steamships, real estate, and other ventures. This diversification protected him from market fluctuations and ensured steady growth. Today's investors can benefit from a similar approach. Diversifying across different asset classes can reduce risk and enhance returns. According to a study by Vanguard, a diversified portfolio can reduce risk by up to 30% compared to a non-diversified one. Vanderbilt's investments were carefully chosen. He focused on industries with strong growth potential. Modern investors should research and select diverse investments with solid fundamentals. A compelling quote from The First Tycoon says, "Diversification is the armor against market volatility." Vanderbilt's diversified investments provided a buffer against economic downturns. Investors today can achieve similar stability by spreading their investments. Chapter 7. Timing the Market, Seizing Opportunities. Vanderbilt had an uncanny ability to time the market. He knew when to buy and when to sell. His investment in the Harlem Line is a prime example. He bought it when it was struggling and sold it at a massive profit after turning it around. Market timing is crucial for modern investors as well. Identifying the right time to enter or exit a market can significantly impact returns. A report by Fidelity shows that timing the market correctly can increase returns by up to 50%. Vanderbilt's success was due to his thorough understanding of market trends. He kept a close eye on industry developments and acted swiftly. Investors today should stay informed about market conditions and be ready to act when opportunities arise. An interesting fact from The First Tycoon is that Vanderbilt once manipulated stock prices to his advantage. While this isn't advisable today, it shows his keen sense of timing and market dynamics. Investors can learn from his ability to read the market and make timely decisions. Chapter 8. Financial Resilience, Surviving Economic Downturns. Vanderbilt's career spanned numerous economic downturns. Yet, he always emerged stronger. His resilience was due to his strategic planning and diversified investments. He maintained financial stability even during tough times. Modern investors need similar resilience. Building a resilient portfolio involves diversifying investments, maintaining liquidity, and planning for the long term. According to J.P. Morgan, resilient portfolios perform better during economic downturns. Vanderbilt's strategy included holding cash reserves. This allowed him to take advantage of opportunities even during economic crises. Investors today should maintain liquidity to seize opportunities in downturns. A unique quote from The First Tycoon highlights Vanderbilt's resilience. "Tough times don't last, but tough people do." This mindset helped him navigate economic challenges. Modern investors can build resilience by preparing for economic fluctuations and staying the course. Chapter 9. Innovative Thinking, Transforming Traditional Industries. Vanderbilt's genius lay in his innovative thinking. He didn't just follow trends, he set them. One of his major innovations was the construction of Grand Central Depot, which revolutionized railway travel. This project not only improved transportation but also set a new standard for infrastructure. Modern investors should embrace innovation in their strategies. Investing in companies that are transforming traditional industries can yield substantial returns. According to McKinsey, companies that prioritize innovation grow at twice the rate of those that don't. Vanderbilt's approach was about seeing beyond the present. He looked for ways to improve existing systems and make them more efficient. Today's investors should focus on industries ripe for disruption, such as fintech or healthcare technology. An interesting fact from The First Tycoon is that Vanderbilt's innovations included the introduction of luxury rail cars, which attracted wealthy passengers and boosted profits. This shows the value of enhancing customer experience as a part of innovation. Modern investors can look for companies that prioritize innovation and customer satisfaction. Chapter 10. Legacy Investments, Building Wealth for Generations. Vanderbilt wasn't just thinking about his lifetime, he was building a legacy. His investments were designed to last for generations. The Vanderbilt fortune continued to grow long after his death, benefiting his descendants. Building a legacy is a powerful investment strategy. It involves making long-term investments that can provide wealth for future generations. According to a study by UBS, families that focus on legacy planning are more likely to sustain wealth across generations. Vanderbilt's strategy included investing in stable, long-term assets like real estate and railroads. Modern investors can follow this example by focusing on assets that appreciate over time and provide steady income. A unique quote from The First Tycoon is, "Wealth is not just about money, it's about building something that lasts." This philosophy guided Vanderbilt's investments and can inspire today's investors to think long-term and build a legacy. Chapter 11. Ethical Considerations, Balancing Profit with Principles. Vanderbilt's methods were often ruthless, but they also raise important ethical questions. Modern investors must balance profit with ethical considerations. This involves investing in companies that are socially responsible and environmentally sustainable. Ethical investing is on the rise. According to Morningstar, sustainable funds attracted over $51 billion in new investments in 2020 alone. This trend reflects a growing awareness of the impact of investments on society and the environment. Vanderbilt's era didn't emphasize ethics as much, but today, investors have the power to drive positive change. Investing in companies that prioritize ethical practices can lead to both financial and social returns. An interesting fact from The First Tycoon is that Vanderbilt's practices often sparked public outcry, highlighting the need for ethical considerations. Modern investors should learn from this and strive to support businesses that align with their values. Chapter 12. The Modern Tycoon, Applying Historical Lessons Today. The lessons from Vanderbilt's life are timeless. His strategies, though historical, are highly relevant to modern investing. Understanding his approach can provide valuable insights into today's market. Modern investors can apply Vanderbilt's principles by being visionary, taking calculated risks, and embracing innovation. These strategies can help navigate the complexities of the current investment landscape. Vanderbilt's success was built on a deep understanding of market dynamics. Today's investors should focus on continuous learning and staying informed about market trends. According to a report by the CFA Institute, informed investors consistently outperform the market. A compelling quote from The First Tycoon is, "History is a great teacher." By studying Vanderbilt's life, modern investors can learn powerful lessons and apply them to achieve success in their own investments.